Hey guys, let me ask you something. When you buy soccer cards, do you do so with an understanding of what will actually make their prices go up or down in the future? Whether you're investing ahead of an event like the World Cup or an anticipated transfer, do you understand how much of that event is actually priced into the cards that you're buying? In this video, I'm going to talk through three primary catalysts for assets, including how those catalysts impact the soccer card market and how knowledge of these catalysts can actually help you make better buying and selling decisions when it comes to soccer cards. So without further ado, let's hop into the video. Just as a bit of background, so I came up with this idea. I was recently listening to a podcast which was mostly discussing the price of Ethereum, cryptocurrency, and basically what the general price catalysts for Ethereum were. And they use price catalysts for other investments as a way to think about price catalysts for Ethereum. And the more I kept listening to it, the more I was thinking that it was very applicable to the soccer card market as well. And in general, most of the market, as I mentioned, doesn't think about price catalysts properly, at least not in the context of what they're buying and selling. And there's three price catalysts that I want to go through that I think are important to keep in mind in terms of when you're buying cards and when you're selling cards, and knowing which of the catalysts could move the asset that you're buying and selling. And those three catalysts are fundamental flow catalysts, one-time flow catalysts, and structural flow catalysts. And I will get into each of those in more detail. And I will leave the link to that podcast in the show notes for reference, just so you can have a good understanding of what I was listening to and just more context around the discussion that I'm going to get into in this video today. Okay, so quick disclaimer. Again, none of this financial advice. I'm not guaranteeing any profits or returns. This is meant to be mostly informative, entertaining, and really thought-provoking. Like I said, it was something that as I listened to, I started thinking how these catalysts could apply to the soccer card market, and I wanted to share those thoughts with you all. Please do your own research. Take what I'm saying with a grain of salt. I'm just a guy on the internet who likes soccer cards. So with that, let's hop in. So the first catalyst, as I mentioned, is fundamental catalyst. So you can think of fundamental catalysts as expectations that are built into the price of an asset based on available information. Most of the time, these expectations are met. The price doesn't actually move. And in fact, sometimes it can actually fall. And the reason for this is that the market's view on the underlying asset hasn't changed. So think of Apple stock as a good example, where you have Apple stock. Everyone knows that Apple is, one of the largest companies in the world. They've been doing pretty well as of late, and their earnings are coming up. So naturally, if people are expecting good news and earnings, and that can happen through, rumors or leaks or just general sort of market analysis, but if people are expecting good news from an Apple earnings release, generally when that good news actually comes on the day that the earnings are released, there isn't a significant shift in the stock price of Apple. And part of that is because the market's view of Apple hasn't changed, and a lot of the expectations around a good earnings release were already built into the current stock price. That's why you always hear this buy the rumor, sell the news. That's effectively what this is a lot of times the price will creep up ahead of a good earnings release, and then when the earnings release happens, people will use that news as a way to sell and take profits and things like that. One thing to note is that unexpected information, especially negative information, can often have a negative impact. So imagine if everyone expects Apple to hit earnings and they don't hit earnings, that could result in a drop to Apple stock. So I have a chart here of the last three earnings releases, the green lines, and you can see back in January, the stock was actually kind of dipping, and then with the earnings release, there was a bump. So we did see a bump. It looks to be about $15 or so per share. Part of that was due to the fact that it was like record earnings for Apple. So I think that's a good example of unexpected information that can shift the stock price or shift the expectations of the market. But you see in late April, the market was kind of dipping, earnings came out, Apple beat earnings, and nothing really happened to the stock price. There was maybe a tiny little jump, but then it kind of kept dipping down. Similarly, now in July, the most recent earnings, the market was already ticking up with anticipation that Apple would be one of the, kind of beacons in what is a down market, and Apple released good earnings, and again, not a significant shift up. The market just kind of kept trickling up. So the idea of fundamental catalysts is a lot of an asset's expectations are generally priced in. And so often when you think of like hype events or earnings releases, they don't actually have as much of a impact as you might think theoretically. So how do fundamental catalysts impact soccer cards? How does this apply to the soccer card market? So one example is when you think of investing in a certain player ahead of the World Cup, or investing in the most popular players or the best players or the best teams ahead of the playoffs in other sports. Often expectations around these players, you think Kylian Mbappe, you think Messi, Argentina, Brazil as teams, they're already really high. Like those are already the teams that people expect to win the World Cup or expect to challenge for the World Cup. So in order for the prices of those players or those, the main players on those teams to go up, like what actually has to happen? I mean, even if France wins the World Cup, what happens to Kylian Mbappe's prices? I imagine there's probably some bump, but I think a lot of the expectations for him are already priced in. And what I mean by that is I don't think his price is, 5x if France wins a World Cup, because he's already sort of expected to contend and win multiple World Cups now for the course of his career. One exception of this, before I get to the charts, is, again, unexpected information or unexpected news. So like a dark horse making a run to the final, like Croatia did in 2018. Nobody really expected that. So if you were invested in Croatian players, they probably saw a bump during that time, or it's possible that if something similar happens in the 2022 World Cup, you could see a bump if it's a team or a player who kind of breaks out and it's an unexpected sort of coming out for that player. And I include a couple of graphs here on the right. So the top one is Joe Burrow. He's the quarterback for the Cincinnati Bengals. This is his Panini Prism rookie PSA 10 base card chart. Basically, or silver chart. This basically is going from a little over 2,000, 2,500 back in the beginning of the football season, and then you see it really doesn't start ticking up until mid-January, where it goes from the 3,000, 3,500, and then really peaks as the Bengals make their run to the Super Bowl. So that's a good example of nobody was really expecting them to do it, and then once they did, there was a huge ramp up and a huge hype, and then people sold off, and now it's trading basically back where it started. And some of that is overall market sentiment. It's not just Joe Burrow specifically, but it just shows that a lot of this stuff, it takes a bit to move the needle, and even then there's a correction. The other example is Giannis Antetokounmpo. This chart is back when the Milwaukee Bucks won the NBA Finals, and he scored 50 points in the last game to clinch the finals. You can see his chart was trending down, and then right around July of 2021, you can see a sharp dip up right here, and that is basically when the Bucks were in the finals, and that's like when they won right there. So there was a tick up, but then you can see it kind of comes right back down and keeps trading kind of where it was before. So what you're seeing here is, yes, these events are having an impact on the prices, but it's mostly the hype. It's not actually, they're not actually step changing the value of these underlying assets long term, because even though there are these short peaks, there's a correction, and then the assets are trading about where they were before this event happened. And there's a number of reasons for that, but these are just examples of how fundamental catalysts could impact sports cards and soccer cards specifically. So the next type of catalysts are known as one-time flows, and these were discussed on the podcast as basically like certain unlocks that will happen at a future date. And so in the stock market, you can think of this in terms of an initial public offering where there's a lockup period, which basically means that employees who hold shares in the IPO company can't actually sell those right away. They have to wait 90 or 180 days in order to sell their holdings. And part of this is to help avoid short-term volatility with a bunch of people kind of dumping and taking, realizing equity and realizing gains from the shares that they've been holding for many years. But basically what often happens is that as these lockup periods begin to end, the market starts to kind of price in what will happen after the lockup period. And so what has to happen is basically the market has to front run these flows. So as the lockup period is approaching, the market can either be trading in or out of these stocks. And it makes it hard because the market actually has to go in and react ahead of time to these, and then also react after the lockup period ends. It makes it really hard for all of this information to be priced in ahead of the unlock, if that makes sense. So often what happens is that they're partially priced in, and then once the unlock happens, the stock either kind of goes up or down and reacts, and then the market reacts accordingly until we hit kind of a new equilibrium. But it's really hard to know exactly what's going to happen ahead of the unlock because you don't really know how many employees are going to sell their shares, how much additional equity is going to hit the market, and what that's going to do to the overall supply and demand dynamics. So you can see here in this graph, there's just a number of past IPOs and like what happened to the shares after a lockup period. You can see for Yelp and Facebook, the shares actually went up. For LinkedIn, Google, Groupon, and Twitter, the shares went down by varying degrees after the lockup. So again, it's hard to know. Generally with one-time flows, they are partially priced in because the market knows they're going to happen, but it's hard for them to be all the way priced in because it requires the market, like I said, to actually front run these flows and trade ahead of the unlock as well as after to find an equilibrium. So a good example of this in the soccer card market is sealed boxes, and most recently a great example is the PSG Topps Chrome team set. So Topps Chrome announced the PSG team set. They also then announced that this would be a set that included Kylian Mbappe on-card autos, which is basically his first auto in general, but definitely his first on-card auto. And that announcement basically made like pre-sale retail prices go up over $10,000. I think on the Topps UK website, these sold for like £10,000. So hype built up. Everyone was, who could get their hands on them and could afford it, tried to do so. And now we see secondary sales of these boxes upwards of $20,000. So this is an example of even once they were released, there was still some buying and flipping happening because the full demand was not 100% priced into the retail price, even though the retail price was very high in anticipation of demand. So this still required the market to buy the product and, kind of race to get the product once it was available, once it was, quote unquote unlocked, and then, sell. And the same thing happens with other sealed wax too. You buy new boxes of something, you hold for a period of time, and sometimes the price of that can greatly increase. But really until, so some of that is built into the initial release, but then there's other unlocks that happen along the way that can increase the overall price. So that's an example of a one-time flow catalyst in the soccer card market. And again, these are hard to price in because secondary market demand is kind of unknown until the product actually hits the secondary market and starts changing hands. And the final catalyst here is what is known as a structural flow catalyst. And this was described as basically after a certain date for the rest of eternity, there will be a continuous flow. So things will kind of change forever, structurally change forever. And, as the name suggests, these flows involve structural changes to how something works. So an example in the podcast was Ethereum is moving from a proof of work framework where we pay mining fees to miners to validate and complete our transactions, to now a proof of stake where there's still fees paid, but they're basically staking fees paid to validators. So it's kind of shifting the framework and the incentives around the Ethereum blockchain and how transactions are validated. And this is a structural change for Ethereum. And another example I thought of in more of the real world is basically Netflix and Blockbuster. So you remember Blockbuster Video was basically the leader in video rentals. And it was kind of hard to understand how Blockbuster could ever be displaced. I mean, they had stores all over the United States, and that was kind of where most people went to rent videos or video games. And then Netflix came along, and it was like, okay, there's this company that's letting us, sending us DVDs, and we send them back. Like, okay, that seems kind of cool. And then once streaming came along, it was kind of game over. And you can see, both in just these two charts, the top chart is basically the historical Blockbuster stock price, which is now known as Blockbuster Liquidating Inc. It's basically just a dead company. And you can see it was trading $20, $30. Netflix was technically founded in the late 90s, but you can see on the chart below, which is the Netflix share price chart, they really didn't start gaining a lot of traction until the mid 2000s. And you can see right around that time, Blockbuster stock price starts to dip and then basically completely craters in 2010, 2011 and flatlines. And that's kind of right when Netflix starts to kind of take off. And then there's just exponential, step change growth since then. And this was something that was really hard, when thinking about, if you were an analyst thinking about Blockbuster's stock, you could think of potential risks and uncertainties for the company or potential pitfalls, but it's really hard to price something like this in because this would involve like this structural change that it's just not really practical to model in the market. You basically have to simulate a company like Netflix coming along and have some group of people trading the other side of it. And it's just, theoretically you could do it, but practically it makes it very hard to price in what a competitor like Netflix would do to Blockbuster until it actually happened. And again, it's just impractical to do from a market standpoint. And these are the types of catalysts that it's hard for our brains to really grasp until they actually happen or start to happen, because the outcome of them or how they happen is often hard to fathom, but then the outsized returns that result from them also seem unrealistic until they happen. So a structural flow catalyst for soccer cards. I've made a video recently about, what would happen if soccer became the #1 sport in America. Mostly meant to be a thought exercise, not necessarily something that I agree with or think will happen in the short term, but something that very well could happen. And that's why I wanted to make the video. But that would be an example of a structural flow catalyst for the soccer card market, where it would result in a cultural shift into the mainstream of soccer, into the mainstream, where its popularity goes from where it is today to something exponentially higher forever. So imagine how popular soccer is in the UK or in Germany or in the rest of Europe. Imagine if that was how it was in the US going forward. It's hard to wrap our minds around that because it's not a reality that we live in today, but it would completely change the way the soccer card market works relative to other sports card markets. And again, it's impossible to price this in because we just don't live in that reality. We can think like, oh, what might happen? But it's really hard to say this is what will happen if soccer becomes the #1 sport, right? Personally, I think that these types of catalysts provide for the opportunity of outsized returns if things come together. So for example, if you invest in a number of vintage or rare or, just a basket of soccer cards, and soccer becomes the #1 sport in the United States, and we have this structural change, there could be outsized returns. Now, is that guaranteed to happen? No. It's also not guaranteed that you'd pick the right cards to be able to realize those gains. Like, there's a lot of things working together here. This also involves a longer time horizon than other catalysts, whereas, a player doing well in the World Cup, you could see a short-term spike. These structural shifts take time not only to happen, but they take time for the market to realize that they're happening or that they've happened. And then it takes time for the market to react and sort of price in, the results of the structural change. But there was a recent report done where there was some market research that estimated the global trading sports card market at around just under $14 billion in 2019. With an estimated growth to almost $100 billion, basically like a 7x market increase by 2027. So just that alone, if you take the soccer card portion of the market, you could expect the market cap of soccer cards to increase by 7x. Not necessarily the market share, but just like the total size of the market to increase by 7x because the overall market's increasing by 7x. But then if you think about, okay, well, what percentage of the market is soccer right now? I have another chart down here, which is from the GemRate blog. It's just the number of graded cards by PSA, SGC, Beckett, CSG for July. And if you just look at PSA for soccer and SGC, it's basically like 2 to 5% of the total graded items, which is not a perfect proxy for like the total market share, but it's, you know, it's close. You would expect if soccer was one of the most popular sports, it would be up here with basketball, football, baseball, maybe Pokemon as, you know, a higher proportion of the grading, which I think just shows that relative to other sports, soccer still has a ton of room to run. And if we saw one of these structural flow catalysts for the soccer card market, there's a lot of room to run there. So I thought that was interesting to look at. So in summary, there are 3 types of catalysts in play, or kind of 3 potential types of catalysts in play when buying certain types of soccer cards. There's fundamental catalysts, which is like investing in players ahead of some hype event, prospecting or ahead of a transfer, or buying ahead of the World Cup, etc. A lot of times the event is mostly priced in because the market is starting to expect that's going to happen. And especially the closer you get to this event, so like a month before the World Cup, a lot of the expectations of the World Cup will be priced into players like Messi or Mbappe or Neymar, for example. One-time flow catalysts is like team sets or wax boxes where you basically have to front run the market and capitalize on secondary demand. So you have to get in there, buy the limited edition team set, and then flip it on the secondary market. Obviously, some of that demand is priced in because we saw at the PSG set, those boxes sold for over $10,000. People were able to flip them for double, which is a great return. So you could say, you know, half the market demand or so was priced into those. And then the third catalyst is structural flow catalysts, which have the longest time horizon and are also the hardest to price in. But an example of this would be investing in rare cards in anticipation of the sea change in the soccer card market, where soccer becomes the most popular sport, demand floods in, and you are holding, you know, some of the more rare GOATs or just the rare modern, ultra modern cards that will be in high demand when the market size increases exponentially over the next, you know, however long. So in conclusion, I guess just to kind of put this all together, I think it's important when you're buying a card or a box or a set or you're making any type of investment to think, what catalysts am I depending on for my investment thesis to play out? So if you're buying prospects because you think that those cards are going to be worth more in the future, you're basically relying on a fundamental catalyst, whether it's performance or it is some sort of hype event like a transfer. You are relying on something happening that will take that demand for that player's cards and increase it between when you buy it and when you sell it. And so it's important to understand like what that is and think about what is the likelihood that that will happen in whatever time horizon you're aiming to towards to sell the card. I think if it's a fundamental catalyst, like I just mentioned, and you're not being contrarian, so you're not picking, you know, you're not looking for some sort of like black swan event where, you know, nobody else prices it in and you're gonna sort of capitalize on sort of a one-off crazy event. If you're sort of just following the market sentiment, it's likely that most of that fundamental flow is priced into that card. So Messi winning the World Cup, yes, he would likely see a bump in his cards, but he's considered one of the greatest of all time. There's a lot of expectations on him. It wouldn't 10x his cards if he won the World Cup. And the closer you get to those hype events, the more it's priced in. So it's a difference between buying for the World Cup a year ago and buying for the World Cup, you know, buying Messi cards as Argentina is making a run through the knockout phases. Like those are going to be 2 different entry points, 2 different investment theses. Similar to like Apple, you know, buying Apple stock the day before earnings. Like you might see a small bump, but a lot of those earnings are likely baked in to the price of that stock. For one-time catalysts, you know, likely partially priced in with some room to run. And that's the example of the PSG team set. Obviously high demand, but there was still enough demand to where you could have bought that box and flipped it immediately for a pretty good return. Structural catalysts, likely not priced in at all, but that's both because they're the hardest to understand and the hardest to predict, and also have the longest time horizon to realize. So this is, if you have a lot of conviction on the soccer card market, long term, and soccer being a popular sport in America long term, you could allocate capital to consolidating into rare, historically great type cards, with the idea that if and when the market plays out like you think it might, then those cards will be worth significantly more someday. But again, because it's difficult to predict, you're also taking a risk, because you're sort of making a bet that won't pan out for a while, and also is hard to kind of get right. And you're also tying up capital for a long time if you're doing that. So I think just generally, I wanted to introduce these catalysts to you because I thought it was really fascinating to think about them in terms of just everyday assets, but also the soccer card market. And I thought understanding these catalysts helps us better allocate our capital when we're making these soccer card purchase and sale decisions, because we kind of know, okay, I'm buying this player for this reason, and this is the catalyst that's going to ultimately let me know when it's time to sell or not. So that's all I have for today. Thought that was interesting. Let me know what you think about that. Yeah, thanks again for tuning in, and I'll talk to you guys soon.